Well, I think it's all come into a lot clearer focus, at least for me, over the last few weeks. We know what's happening with the virus, which is cases are escalating, and that'll hurt us in the first quarter, maybe first half. We know we have a vaccine, and hopefully that'll get rolled out in time to help us in the second half. We know what's happened in the elections, and I think we've got a lot clearer sense on the fiscal side. So I do think you're looking at a second half that's going to be very strong. And the question, I think, is how do we get through from where we are today to that second half? And I will say, while it might be bumpy, I think there are backstops here. In particular, fiscal will be a backstop. I think elevated savings are a backstop. I think the potential for more stimulus, potentially inventories are low, which is another backstop. So while I see some bumpiness, I do think we've got some backstops here in the first half of the year.
I want to ask you about the second half, which you said is looking strong, and that's pretty much consensus. It's a powerful combo, getting the vaccines and all of that stimulus. President-elect Biden even talking about trillions more. What about the risk that the economy just comes roaring back, and with it, so does inflation? How likely is that of a risk factor for 2021?
Well, I think when we look at the numbers in the second quarter, we'll see a lot stronger inflation than we've seen just because the comps from last year were so weak in the second quarter. By the way, in the third quarter, the comps will be very strong, so that'll hold it back a bit. I think one of the things I've tried to dig hard into is all of these excess savings. You know, what happens when people are free to spend again? And it's actually surprising. You don't see it coming into the economy quite as powerfully as you might guess. In part, you know, a lot of what we've given up are services. And while I probably need a haircut, I don't need two. And I might need a dentist appointment, but I don't need two. And so some of those services just take a while to get back into the economy. Some of the things that are big factors in inflation, like rent, are just going to take a while to adjust. And so at least my forecast, while it comes back, I think you're more likely to see it support spending over several years rather than it be some big episode in the third or fourth quarter.
Rich Clarida said last week that he didn't expect any tapering of the bond purchases for the whole of 2021. Is that your base case assumption then as we sit here today as well?
Well, we've given outcome guidance, not date guidance. So I couldn't tell you the date. I do think this notion of substantial further progress is the right way to think about it. And so there are scenarios certainly where we see strong recovery in unemployment and inflation, but there are lots of scenarios where we don't.
But it's a little ambiguous, the substantial progress, because if we do see a very strong second half of the year, and with that hopefully a much lower unemployment rate, then how will the market know when the paring back of that $120 billion a month in bond buying actually comes?
Well, I think the chair said in his press conference that our intent is to communicate well on this. And so I think we've learned lessons certainly from 6 or 7 years ago. And he was on the committee, of course, at that point. And I expect us to do our best to communicate well there. Unemployment was 6.7% when we gave that guidance. Inflation was 1.4%. It's still both in the same place. And so I think you would need to see substantial progress against those numbers toward our goals before the discussion gets on the table.
You reported as saying last week that you felt the spike in government spending is likely behind us, even despite the results in the Georgia runoff. So if we did see $1 trillion plus of stimulus, for example, at some point in H1 in the first half of this year, would that come as a surprise to you? Would that increase what your forecasts were for things like inflation in the year ahead?
Yeah, I was actually giving a talk on year-over-year spending. And, one of the points I made is I see business investment being much stronger this year than last because I think conditions are clear and people can invest with confidence. Consumer spending, we'll see as I discuss what happens in the second half of the year. And the point I was making is that government spending is going to be down year-over-year, right? Even if you take the $1 trillion that you assume there, add it to the $900 billion, that's still going to be less than we put into the economy this year, the $3 trillion that was passed in the CARES Act.
Shepard Smith here. Thanks for watching CNBC on YouTube.